What's up everyone? Welcome back to my channel. My name's Eric. Today is the 27th of July, 2021. I closed one trade today and I opened two more. I closed this snap trade here in just over 1 day for 60% of my max profit for 36 bucks. And that was a 4.3% return on capital. And then I opened a SPY monthly iron condor here for the 401, 406, 460, 465 strikes. And I collected $1.07. And then Tesla, they had earnings yesterday and I sold a vertical put at 605, 600 for the weekly. And I collected 54 cents. All right, let's take a look at the snap chart first. So again, I was in this trade just over 1 day. I got 60% of my max profit. My return on capital was 4.3% and my profit per contract was 36 bucks. You know, $36 doesn't seem like much, but the 4.3%, in 1 day, that's really good. I mean, if you could do that 5 days a week, that'd be 20% a week, right? So that kind of shows you how trading the weeklies can really add up if things go in your favor. They can also go against you quickly, right? Anyways, I sold the 82 call yesterday for 60 cents. And sure enough, that was a pretty good entry because it basically went down the whole time. And I was able to close out at 60% of the max profit. I took profit a little early on this just because it's a call. I don't like messing with the calls as much as rolling out puts and stuff, just because the calls can kind of get out of hand in a way. You just end up rolling and rolling. They usually take up more and more buying power for some reason. So anyways, I just usually go a little more conservative with naked calls like this instead of a naked put. If it was a naked put, I probably would have shot for a little more profit, but 60% in 1 day, I don't know. I'd probably take that no matter what. So you can't really argue with that. So quick and easy winner there. And I moved on. All right, so after I closed that trade out for a winner, I opened up a SPY iron condor for the monthly expiration. I think there was 52 days in the expiration till September 17th. And I sold the 400, 405, 460, 465 iron condor. And I just needed to stay in this orange box here and I will be good to go. I sold it for $1.07. And with the protective wings on the iron condor here, my max loss is roughly around what? I guess that'd be $4.93 would be my max loss if it totally went against me. I'm looking at staying in this trade, 3 to 4 weeks and taking profits around 50%. So I'm shooting for, $50 to $55. If I get 50 bucks out of the trade, that'll give me about 11% return on capital. And because this is a monthly contract, I'm using the daily chart here, not the 30-minute like I do for the weekly contracts. So just keep that in mind when you are looking at the chart here and kind of comparing trade to trade. All right, and then my last trade here was in Tesla. And I sold the vertical put of 605, 600. And this is on the weekly expiration. So by this Friday, the 30th of July, 2021, this contract will be over. And in the next 3 to 4 days here, I just needed to stay above $605. And I can let that expire worthless for 54 cents, which is the maximum profit that I can receive. Otherwise, I can close it out early and take a little bit less. Using vertical spreads on higher dollar tickers like Tesla is great because it locks in your maximum risk and it locks in your maximum buying power that is used for the trade. If you did a naked 605 put here, instead of using $500 of your buying power, because it's right now it's 605 and 600, so that's 5 points wide. So that's $500 of buying power. If you did a naked 605, you would use something ridiculous like $20,000 in buying power. These vertical puts or an iron condor is a good way to, lock all that in and use much less buying power, but then you still make a decent return. If I let this expire for the 54 cents, I think that's around like 12% return on capital in just 3 days, which again, that's great. That's, 3 days divided by 12 is 4% per day. And that's really, you can't really complain about that. That is a great return if that's how it works out. Obviously, if I close it a little bit early, maybe be 10% return on capital in 3 days instead of 12 or whatever it ends up, right? So I've always had my eye on Tesla for these vertical put spreads because I think the deltas at this open were like 15 and 13 for the 605 and the 600. And that's really good in comparison to some other stocks. When you do a vertical put spread, instead of the 15 delta, I might be as high as like the 20 or 25 or 30 delta even to get a decent amount of money. But with Tesla, I can get way out there at the 15 delta for a weekly vertical put spread. And that's pretty good in my opinion. So anyways, that's why I always keep an eye on Tesla. And even right now, their IV is super low. It's basically at 0 right now. And you can still collect 54 cents, on this vertical put spread where, if they had an IV like in the 30s, that could be like $1 or something. So you still get pretty good premiums, even though it's, only 54 cents or $54 if you get the full profit. But again, this is just one contract. If you have a bigger bankroll and you can scale up to do multiple contracts, all of a sudden that 54 cents is multiplied by however many contracts you do. But also, always, you got to be aware that your losses will also be multiplied by however many contracts you do. So always keep that in mind. Anyways, I guess that's all for today. These other 2 trades I opened yesterday with Chewy and Plug, they went against me today, but both of those I think kind of finished right around the strike price is like at the money now instead of, out of the money. So I'm going to let those ride out here for another day or so. And if they continue to go against me, I will roll those out to next week. All right, thanks again for tuning in, and I will see you in the next video.